Here's why you suck at trading. Chances are, if you're watching this video, you've been down the YouTube death loop, I call it, of different trading strategies, trying to find something that's gonna work, but you just can't be consistently profitable, right? Month over month. It's different to win one winning trade, but to be able to do it month over month is a skill that not many people possess. Now, if you guys don't know who I am, my name is Matt Pease. I run one of the largest trading communities in the space called EzTrades. I've been posting my daily setups and analysis for going on 3 years now. I'm a consistently profitable trader with anywhere from a 65 to 70% win rate month over month. Here's what I did last month, and I've made multiple six figures in the crypto markets. Just to add some validity to what I'm gonna be sharing with you guys today. So I have a list on my phone here of the most common mistakes, which I believe are the root causes of people becoming unprofitable traders. And this has nothing to do with any certain strategy. The first reason that you suck at trading, okay, you don't have a clear thesis and invalidation going into the trade. So anytime I post a trade setup or I'm looking to enter a trade, I always draw out in advance what my trade thesis is, what I'd like to see on the chart before I enter the trade. This allows me to stick to my plans, to follow my rules, and anytime I'm looking for an entry, I always write down the reasoning behind, the confluences that I have at said level. For example, I'm looking at a Bitcoin long currently. My trade thesis is that I'm looking for a throwback to the previous structure high. So I'm looking for a breakout and retest. We also have the golden pocket fib confluence, and we have some bullish fair value gaps, and structure is clearly bullish. So if I go to a lower time frame and I see bullish divergences, I will enter the trade. So that's my trade thesis for entering that trade. And any trade that I take, I always have a thesis. We call it a trade thesis. What is my reasoning for entering a trade at this level? And this sounds very simple, but most of you guys aren't marking out on your charts in advance what you'd like to see. You're not writing down your confluences at certain levels, and you're not waiting for your rules to be met. Another thing you guys need to have is a clear invalidation level, right? Someone in my group today said that he was long on a certain altcoin, and he said, I'm a little bit scared because price is going down. I said, okay, what's your trade thesis and where is your invalidation level? He said, well, to be honest, I don't have an invalidation level. How the fuck do you expect to be a profitable trader when you don't even have an invalidation level? Are you just gonna keep holding until you get liquidated? No, you need a clear invalidation level. If price reaches this level or if price fails this level, then I am out of the trade because my thesis is now invalidated. So you need to have that before you enter the trade. Not while you're in the trade, but before you enter the trade. We're trying to implement practices that are gonna help us become profitable for the long term. If you are changing your trade thesis while you are in the middle of the trade, that's not something replicable, right? You can't do that time and time again. You don't have a clear plan because you're changing it in the middle of the trade. So don't do that. Have a trade thesis beforehand, draw out on the chart exactly what you want to see, and have a clear invalidation level. Now, another reason you suck at trading is because you're not letting your thesis play out. A lot of you are taking profit too early, right? You're not following your rules. For example, if I take a long position and I take profit one at a 1-to-1 risk to reward and I close half of my position, I need like a 60 to 70% win rate consistently because my risk to reward is low. I'm not letting my full thesis play out. So something I'd recommend for you guys is have your invalidation level, right? Your stop loss, and then have at least a 1 to 3 risk to reward. Now you can move your stop loss to break even after a 1-to-1 or 1-to-2, but you don't want to be taking profit too early. You need to let your trade thesis play out. A lot of the time, what's actually causing you to become unprofitable isn't your trade setup, because most of you guys that are watching probably have really good setups. You're executing right, but because you're not letting your trades play out, you're not letting the trades reach their full take profit, you're missing out on all those extra R's, right? We call it R. If I risk $100 to make $300, that's going to be a 1 to 3 risk to reward, or R/R. We like to think in terms of R's, not in terms of percents, right? So don't take profit too early, because on a long enough time frame, you're just self-sabotaging your own gains. Same thing can be said for stop loss, right? Let price hit your stop loss. Let price hit your invalidation level. You've already in advance planned your trade setup. You have your invalidation level beforehand. So let price come down to hit your stop loss. Don't try to micromanage the trade while you're in the position, okay? If price hits your stop loss, it hits your stop loss. Don't get scared when price is consolidating around your entry and close the trade too early. Again, you want to let your trade thesis play out. You've already identified the setup beforehand. You've already marked the levels and confluences on your chart beforehand. Now it's the time to sit on your hands and let your thesis play out. If your stop loss gets hit, that is okay, because if you have a 1 to 3 risk to reward ratio, the way I teach, then you can have 3 losing trades and 1 winning trade will make back up the losses of those 3 winning trades. Now, a good way to go about this, so you're not micromanaging the trade while you're in it, is to enter the trade set your stop loss, set your take profit, and don't look at the chart, okay? Walk away from your chart because it's normal for price to fluctuate while you are in a trade position, right? Price is gonna go up, it's gonna go near your take profit, then it's gonna come back down, might go back down to entry, might go near your stop loss. At the end of the day, it's either gonna hit your stop loss or it's gonna hit your take profit. You were either correct with your thesis or you were wrong with your thesis. So you need to make sure that you let this play out. Third reason why you suck at trading is because you're over leveraging, right? You're over risking based on your entire portfolio size. Again, I'll use another example. I had someone in my group, he made a lot of money last month. I think he made like 8 grand, doubled his futures portfolio, which is kind of concerning because your risk management has to be pretty poor if you're doubling your portfolio in the span of a month, because again, on a long enough time frame, you're gonna get liquidated. And we had a flash crash on Bitcoin, didn't even dump that much, but because he was in 30 different long positions, he lost like 3 grand. He lost like 20% of his entire futures portfolio simply because he was over leveraging. So what I like to do is I like to risk 2 to 3% of my entire futures portfolio per trade. So if I have a $10,000 account, I'm gonna risk $200 to $300 per trade. So if I get stopped out, I lose anywhere from $200 to $300. My portfolio is a little bit bigger. I usually use like a 1%. I use very, very strict risk management. I don't risk more than 1%, but that's because I'm comfortable with what I'm risking. If you have a slightly smaller account, you can risk 2 to 3%. And now that's only on one trade. So if you're in 5 different trades and price hits stop loss on all of your trades, you're gonna lose 15% of your portfolio. That is risking way too much. So if you're risking 2 to 3% of your account per trade, only get in 2 to 3 trades at once, okay? There's no need to get in 20, 30 positions at one point in time, especially if you're a cryptocurrency trader and you're trading altcoins. Most altcoins move together. So if one altcoin goes up, every coin is gonna go up. And if one altcoin goes down, all the altcoins are gonna go down, okay? They move together. So it doesn't make sense to enter 20 different long positions, even if you're risking 1 or 2% of your portfolio, when you can dial that back, maybe enter 2 to 3 positions, risking 2 to 3% of your portfolio. And now there's less trades to manage because managing 20 to 30 positions is extremely difficult, right? If you're a brand new trader, I would recommend sticking to strictly Bitcoin and Ethereum, only taking 1 to 2 trades at once. There's no need to over risk, to over leverage. A good way to practice your risk management is to get a funded account, okay? Not because you want to get payouts from the funded account. The rules are very, very strict. And for new traders, this is very helpful because it will implement good risk management practices that you can use in your live trading. Again, I'm not a fan of fundeds per se, but it does teach you good risk management because most of you guys have shit risk management. You see these guys on YouTube, you see these guys on Instagram making 10, 20, 30K trades, and you want to catch up to them. Oh, I want a 1 to 2 to 3K trade. Let me over risk on my account. That's how you end up getting swept, okay? Focus on yourself. You don't need to catch up with guys that have been trading for 10 years that have multi-7-figure portfolios, okay? You're brand new to trading. Use good risk management. The whole point in trading isn't to make quick cash. It's not to become rich quick. It's to develop a system that you could use month over month, year over year to consistently make profits. And over time, your portfolio is going to grow as long as you are using good risk management practices. Reason number 4 that you suck at trading, okay? You listen to other people. Now, I know this is kind of hypocritical because you're probably thinking, well, Matt, you have a pro group where you're sharing your setups, your insights. Why shouldn't I just follow your trades to a T and listen to you? You never want to rely on someone else's insights or signals to become profitable. You can learn from these people, yes, but at the end of the day, think for yourself. Draw setups for yourself. Don't depend on another person or another group to give you trade ideas. Because again, you're trying to build a skill that will last for a lifetime, okay? It's not realistic to simply follow someone else's analysis for the rest of your life. So learn how they see the charts, learn from them. You can follow some of their trade ideas, some of their setups, so you can learn from them, but don't rely on one person specifically to give you certain insights. And I see this on Twitter too. People will see some random Twitter user talking about a certain meme coin or a certain chart saying this is bullish. Guys, most of these guys on Twitter, they don't know how to trade. They made a few millies in crypto because they got in early, but their analysis is not correct analysis. Most of these guys don't know how to trade. And if you were to follow all of their trades and you documented it on a spreadsheet over the course of 12 to 24 months, I guarantee you would probably be either break even at best or in loss from these guys' signals, okay? So don't follow random people on Twitter or on YouTube. Learn how to read the charts yourself and actually develop the skill of trading. Now, again, you can learn from these people, but you never want to be in a position where you say, you know what, I just can't become profitable. Let me just follow signals. Okay, let me just follow a signals group. Guys, is that realistic? You're going to follow someone else's signals your whole life? Another problem with following someone else's signals, if you don't actually know how they're entering the trade, is that you're not going to be confident in the setup. You're most likely going to make one of the 3 other mistakes that I've already mentioned because you're not even even confident in the setup. It's someone else's setup. When you have identified your own trading setup and you have identified certain levels and certain confluences, you can be more confident and by extension, a better trader because you are following your own analysis. You are confident in your own analysis. You know exactly the invalidation level. You know how to manage the trade because you are the one doing it. You're not relying on anyone else. The last reason you suck at trading is because you haven't put enough skin in the game. You need to put time in the markets. I literally have not met anyone, at least for my own group, that's been trading for 3+ years that is not a profitable trader and hasn't seen results because it's pattern recognition. At a certain level, you subconsciously are just able to recognize certain patterns, and sometimes you can't even explain it. Like, I'll be looking at a setup, I might not follow all of my confluences to a T, and I can't really explain to my group why I'm looking for a trade there, but because I've recognized this certain pattern and there's so many individual neurons firing off in my brain telling me that, okay, this is a good setup based on what I've seen in the past, that's something that can't be taught. You just have to put time in the game, and you will take losses, okay? It's not gonna be only wins. You're gonna take losses, but you gotta put time in the game. This is a skill for the long term. This is not a get rich quick. If you wanna get rich quick, your best bet is either going to the casino or trading spot crypto, low cap coins, hoping to hit a 10, 20, 30x, which I also share in my group, by the way. But again, that's not really realistic, and that's not something long-term. That can be a quick cash grab, but you wanna be making profits consistently month over month. That's it for Vette Talk, okay? It's a new series. I'm calling it Vette Talk. Let me know if you guys want me to do more of these videos, just sitting face to face. Most people would have clicked away after the first 3 minutes of this video because everyone's attention span nowadays is complete dog shit. They can't sit through a 10 to 15 minute video where someone could literally change their life with the advice they're giving because, you know, their brain cells are just fried. They got the TikTok brain. You know, they can't sit still and watch a video. It is what it is. If you made it to the end of the video, just know you're doing better than most. Don't watch this as entertainment. Try to actually implement everything that I've said, or get a notebook out and write it down so you know. It's good to take notes and to listen to people, but you want to actually implement it in your own trading, right? If you're not actually implementing it into your own trading, then I'm wasting my time and you're wasting your time. Now, the reasons I've laid out as to why you suck at trading are pretty easy to overcome. I mean, it's literally only something that you can control. I can't teach you. Jay can't teach you. None of the other mentors in my group can teach you this. It's just something that you have to do. If you guys want to get mentored by me directly, use the trading algorithms and resources that I use to profit on a day-to-day basis, then click the first link in the description below. What other guru is showing you guys their daily trade setups all in advance, all live, posting their losses too, right? I also post my losses. It's not all wins. So imagine what kind of value that I have inside of the pro group. So if you're interested, click the first link in the description below, leave a comment on the video if you enjoyed, and I'll see you guys next video.